Hello everybody and welcome to Pimbrook Software's webinar on Brexit and Sage 50 software. My name is Fiona and I'll be running through the webinar with you this morning. Just a bit of housekeeping first. We have a large group on today, so everyone's going to be on mute, but we will have time at the end for questions and answers. You'll see the chat box at the bottom of your screen there, and if you have any questions, you can type them in there and hopefully we'll get to them at the end. But if you do have any additional questions or we don't get your questions, you can still email them into support@pimbrook.ie and we will get back to you. So our agenda today, we're going to go through the current Brexit situation, just an overview and an overview of some general guidelines, have a look at who this will affect, and then get on to the main stuff, our new release Brexit features and upgrade options. And we'll then have a look at the workarounds if you're not going to upgrade or you're not in a position to upgrade. And at the end, then we'll have our questions and answers. So first of all, the United Kingdom left the European Union, as we all know, on the 31st of January 2020, after they negotiated a withdrawal agreement to facilitate an orderly departure from the EU. The withdrawal agreement provided for a transition period which ended on the 31st of December 2020. So after January the 1st, 2021, the UK is no longer part of the EU Single Market and Customs Union. This will mean new procedures apply for businesses moving goods to, from or through the UK, excluding Northern Ireland. The Northern Ireland Protocol, which forms part of the original withdrawal agreement, means that no new procedures will apply to goods moving between Northern Ireland and Ireland, and of course the other member states of the European Union. On the 1st of January, the transition period will end, which means, amongst other things, the UK will leave the EU VAT regime. So this means that the UK will need to treat sales and purchases to and from the EU as rest of world or ROW, exports and imports, and they can no longer treat them as intra-community supplies and acquisitions. And similarly, for other EU countries, including us, the Republic of Ireland, will also need to treat sales and purchases to and from the UK as rest of world exports and imports. This does mean that goods will now have to go through the complex import and export processes like goods from the rest of the world. It will also impact how Irish businesses apply VAT to these transactions and account for them on their VAT return. These changes are further complicated by the Northern Ireland Protocol, which keeps Northern Ireland tied to the EU in respect of goods. In summary, what does the Northern Ireland Protocol mean for Irish businesses? So, when buying goods from Northern Ireland under the Northern Ireland Protocol, goods located in Northern Ireland should continue to be treated like intra-EU community acquisitions after the 1st of January. And again, if you're selling goods under the Northern Ireland Protocol, you should continue to treat them like intra-EU dispatches and distance sales after the 1st of January. So what is changing for the Republic of Ireland? So in the Republic of Ireland, sale of goods to Great Britain will now be treated as rest of world exports, as we said. Sale of goods to Great Britain with a consignment value of under £135 will now be covered under the new UK import scheme. So for business to business, UK supply VAT is accounted for by the customer via reverse charge. But business to customer, UK supply VAT is charged by the seller, who will now need to register for UK VAT. Purchase of goods from Great Britain will now be treated, as we said, as rest of world imports. Sales and purchases of goods to and from Northern Ireland will continue to be treated as intra-community dispatches and acquisitions. Great Britain should be excluded from intrastat reporting and EC sales lists reporting, and Northern Ireland should be excluded from a services perspective. The UK should be excluded now from MOS reporting. Any UK VAT due on business to customer sales of services will now require the seller to register for UK VAT, as we said earlier. We will now need to use Eori numbers and commodity codes when trading with Great Britain. From the 1st of January 2021, businesses in the Republic of Ireland can avail of postponed VAT accounting. So what is this postponed accounting? So basically it means that VAT due on imports from the rest of the world, which will now include the UK, can be accounted for on the VAT return. So rather than having to pay the VAT as soon as the goods arrive at the border. Import VAT can be reclaimed at the same time as it is declared on the VAT return, and that's giving a cash flow neutral situation for businesses. This postponed accounting was basically brought in for cash flow and also for customs convenience for traders. It is applicable not only to the UK imports, but all rest of world imports. And we will go through it later, and you will see that the VAT return and the return of trading details have now been amended to include additional fields for postponed VAT. So postponed VAT, who and how? So from the 1st of January 2021, businesses in the Republic of Ireland can avail of postponed VAT accounting. All accountable persons who are registered for VAT and Customs and Excise at 11 o'clock on the 31st of December 2020 will be given automatic entitlement to postponed accounting. So there's no need to apply for it. VAT registered traders who are not registered for Customs and Excise at the 31st of December, they can now register for Customs and Excise and get the automatic entitlement to postponed accounting. Traders don't actually have to use postponed accounting. You can still go ahead and pay the VAT at the point of import or avail of any existing deferred payment systems if you wish. And now we'll talk about the Sage 50 Cloud Accounting software version 27.1. But today we're only going to focus on the Brexit features. To find out the other features of version 27.1, you can register for our webinar on Sage 50 new release on Thursday, the 27th of January, 10 a.m. So version 27.1 is the latest release of Sage 50 cloud accounting software, and has been brought out primarily to help the processing using postponed accounting. It has 5 new VAT codes specific to the UK and 12 codes for the Republic of Ireland, as well as amended VAT and return of trading detail return layouts. If you are in a position to upgrade your Sage 50 to version 27.1, please ensure that you do follow the usual protocols. You take a data backup, run the upgrade on your software, and again, if you do want some support, please call the support team for advice or a quotation if you want us to do it. Again, you will see later in the webinar a manual workaround if you're not in a position to upgrade to 27.1. So once you have run your upgrade and it's complete, and you log into your Sage 50 for the first time, please ensure that your regional settings on the machine that you're opening the company for on the first time are set to Ireland if you're opening an Irish company. And likewise, if you have a UK company, make sure that the regional settings on your server or whichever machine you're opening the company for first on the first time are set to the UK. This is vital because for the setup of the correct tax codes for postponed accounting. So now before we look at the new tax codes, I just want to mention that throughout the presentation that we refer to specific tax codes, we are referencing the Sage standard tax codes as listed in their knowledge base articles. So now back to your Sage 50 installation. And the first thing that you'll get when you open your company is the notification that the new tax codes have been added. So you'll either get, if it's an Irish company on the left, you'll get this notification that 12 new tax codes have been added, and it will list the ones that have been added. So in here you can see from T39 up to T51 has been added. And likewise, if you're opening a UK company, you will get the screen on the right notifying you of the new tax codes which have now been added. This, again, as I said, is driven from the regional settings on your computer at the time of opening your company. Very important. So to view your new tax codes, again, you go up to settings, down to configuration and select the tax codes. And you can see there that you will get your list. You can scroll down and have a look at the new boxes. So when you do go up and review your new tax codes in 27.1, you'll notice that the standard rate for postponed accounting on code T39 or your equivalent of it is set to 23%. As you know, Ireland currently has a temporary VAT rate of 21%, and I think that's at the moment set to expire in February. But this also applies to import VAT. So instead of amending the existing T39 code, which is set to 23%, you also have the option to set up two new additional codes to use while this temporary rate is in place. So you can just select the next available tax code, hit the edit button, and this is basically on the screen there what the setup is going to look like for the 21% resale code. It should look basically the same as your T39, except you'll have 21%, and again you'll be linking it to your, as we know, T39, which is 21% for those of us who have the temporary rate set up in their T39. Now, VAT codes. So we're going to just continue on and first take a look at the selling codes and selling goods. So selling goods to the UK is now the same as the rest of the world is an export. And we're going to use T14. Previously, we used T4 for intra-EU acquisitions. Now we're going to use T14. Now remember that Northern Ireland still stays the same as per the Northern Ireland Protocol, and we'll continue to use T4. Buying and selling services business to business, the VAT codes. So selling services to the UK is now the same as the rest of the world. And again, we're going to use T14. Now, previously, we were using T22 here. But for the rest of the world, revenue does not have a reporting requirement to show services separately. Again, selling services to Northern Ireland is now the same as the rest of the world. And again, we must use T14. These are all standard codes. Buying services from the UK and Northern Ireland is now the same as the rest of the world, and we must use T21. And again, we were using T23 separately for the EU, previously for the EU. We're now using T21 of the Sage standard codes. So just a few little changes there. And now a word about country codes in Sage 50. In version 27.1, 2 new codes have been created in the countries list. Northern Ireland now has a code XI and Great Britain has a code XU. So when you launch your 27.1, you will notice that Great Britain is not ticked for being an EU member. And just remember that you will need to tick this box if you still have to process some December EU transactions, and again, most importantly, for running the December Vs and Intrastat reports. You must go in and tick it as being an EU country until you get those things done. If you're trading under the Northern Ireland Protocol, you must change your own country code now to Northern Ireland, which has a code XI. And for this, you go to Settings and Company Preferences. The EORI number, Economic Operator Registration and Identification, must now be shown on commercial invoices and other customs documentation. In version 26 and above, you can enter this in Settings and Company Preferences, and there is an actual box for your own EORI number. But version 25 and below has no specific field for this EORI number, but you can choose an unused field, for example, one of the custom fields in your own record in the customer record. Again, the EORI number can be put on any layout. It can be modified. Layouts can be modified to include the EORI number. So the EORI number is issued by revenue, and it is needed if you wish to trade goods in or out of the EU, submit declarations using software, or again, allow your agent to do so. If you want to apply to use simplified custom processes. Now we've included a link at the bottom there to revenue.ie for any more information and registering for your EORI number. Once you have your EORI number, you can enter it in there in Settings and Company Preferences, and you can see there in version 26 and above, there is a box there for it. Now, commodity codes. Commodity codes are used to classify goods for import and export in Sage 50 cloud accounts and for customs. They're used to complete declarations and other paperwork, check your duty and VAT requirements, and check for duty reliefs. Very important. In Sage 50 Cloud Accounts, you can record your commodity code in your product record. So into products and services, double-click the product, and you can see the boxes there, Intrastat COM code for your 8 digits and COM code description fields as well. Save and close. Again, we can amend any layouts that you need to include these on. Now again, just a word about the new commercial invoice layout. Sage have created a commercial invoice layout, which has now been automatically included in version 27.1. For earlier versions, you can download this from the Pimbrook Knowledge Base 33410 to include in version 26. Now this is a sample layout, and again, it includes the EORI number, the HS tariff code or commodity code, the country of origin, the weight. We're finding that people will need to get this tailored themselves to their own situation, so you can ring into the support team to do that. Now, just a word again about additional records that may need to be amended before you start processing in your 27.1 version. You may want to have a look at your UK customers and suppliers' VAT codes to change the defaults. Again, your default product codes. Have a look at non-complete invoices, credit notes, sales and purchase orders. Have a look at any existing set up recurring entries. And again, memorize transactions. You may need to amend any default tax codes or layouts. So our version 27.1 allows us to post import transactions using postponed accounting. As we said earlier, it installs an additional 12 codes for use in Irish companies and five postponed accounting VAT codes for UK companies. It has amended VAT and return of trading detail returns with the additional fields for postponed accounting. If you are unsure what version you are on, you can check this up the top, go to help and down to about, and you'll get the version number. And again, just a reminder that if you are going to run your upgrade, please follow the usual protocols, important protocols like taking a backup. Okay. So you're now confirmed you're on 27.1, and just to go through again quickly, the setup that you want to make sure that you've identified your UK and Northern Ireland customers and suppliers, you've amended any VAT codes as necessary, entered your Eori numbers, entered your country codes, identified import and export products to ensure they have commodity codes and default VAT codes, and then ensure that the UK is not ticked as an EU country. Just a word first about sales transactions. We are going to focus more on the purchase and import transactions. Sales transactions, as we said before, should continue to be processed in the same way as before, just with the different tax codes as we went through previously. So purchase transactions from the UK are now going to be import transactions, and we will be assuming that you've opted for postponed accounting for VAT. When you enter a purchase invoice for the UK supplier, you will now use the new tax code, in this case T39. You'll get a new pop-up box saying, the tax code you have selected indicates you are using postponed accounting. When you save this invoice, a VAT-only credit note will be posted automatically for postponed VAT. And this is exactly what happens in the background. Sage 50 creates a VAT-only credit note against this UK supplier, and that leaves only the value of the goods outstanding for this UK supplier, and you can pay the UK supplier then in the normal way. So as you can see in the post above, a purchase credit was automatically created on the supplier's account. So this is the two transactions that were created with the VAT only. And this reduces the net amount that is due to the supplier to the cost of the goods only. The input VAT is then reflected on the VAT return. So you can now see the VAT in the boxes T1 and T2, leaving a net payable amount of 0. And again, you'll see the value of the goods in the new PA1 box, value of goods imported under postponed accounting. This is one of the new boxes. And you can see that that includes net plus carriage, insurance, and freight. So any invoices for carriage, insurance, and freight should be posted using the same postponed method, using the tax code T39. And this will make sure that the total VAT will be reported on your VAT return. Moving on then to the return of trading details, you will see again here that is reflected as normal, and it's also included down the bottom there in the PA2 and PA3 boxes. Changes to the return of trading details within Ireland. So it has been amended to incorporate the postponed accounting. You'll be able to see once you open your software that the headers have been changed to include postponed accounting. Row and column labels. The 9 and the 13.5% rows have actually been combined, and that's mainly to make room for the added boxes down the bottom, the PA2 and PA3. And again, if you want more information about how the new tax codes impact on the return of trading details, you can have a look at, there's a link at the bottom to the SAGE knowledge base. Or you can ring into the support desk as always. So at present, you cannot actually upload the XML files for Sage VAT return to in the UK or to HMRC or in Ireland to revenue. So this has currently been worked on, and hopefully the next update will have this feature included. But in the meantime, Sage have created a report to generate the figures to enter into the new PA boxes on both the VAT return and the return of trading details. And again, there's a knowledge base there from Pimbrook 34380, and you can download instructions and a copy of this report to get the numbers to put into the VAT return. So in summary, if you haven't upgraded already, we would recommend that you do this in order to start processing under the postponed VAT accounting. It's quite easy. There's not a lot of changes on the version 27.1. I'm going to move on now to show you the manual workaround, which allows you to process postponed VAT transactions in version 27.0 and below if you're not in a position to upgrade. So again, the setup is quite similar as we spoke about earlier. From the 1st of January 2021, we recommend that you complete your 2020 Intrastat and VES. Then you must go in and remove the UK from the EU in your settings and country codes. You need to amend the Northern Ireland customers and suppliers VAT numbers, and we'll go through that in more detail in a minute. You need to create new VAT codes yourself, and we'll go through that in a minute. Again, you need to go through the same things as you did with 27.1. We went through the Eori numbers need to be entered, the commodity codes need to be checked for all your products. Again, amend records for your UK customers and suppliers and just for their default tax codes and products as well. Customers and suppliers in the UK to have a default tax code for postponed accounting. Incomplete orders and invoices, again, change the codes on anything that's outstanding that hasn't been finalized on the 31st of December. So now we'll have a look at country codes in version 27 and below. So for Northern Ireland customers, you will need to change their VAT number to enter GB and XI before their VAT number in the customer record. There is no country in any version 26 and below, there's no country in Northern Ireland. So the way they get around that is you must edit their VAT code, identify your Northern Ireland customers and suppliers, and edit their product customer record and enter their GB and XI, as you can see there, in their VAT number. So that's the customer. The supplier is the very same. Any Northern Ireland suppliers enter GB and XI before their VAT number. Now you will need to set up your new tax codes. They won't come in automatically. And you set them up in the next available 12 fields. So it doesn't have to be T39 as shown here, but you need to find 12 sequential, a block of 12 sequential where you can set them up. So make sure the new code is set up in the same way as the code in the replica column here beside it. And enter the description as you can see there on the screen again. So for T39, you need to make it a replica of T1 and enter the standard rate ROW import for resale postponed VAT. That's the description. Now, those 12 codes are the standard 12 codes. Again, you can set up an additional 2 codes for the Republic of Ireland temporary VAT rate of 21%. Again, before we talk about processing the import transactions, just a reminder again that sales transactions should continue to be processed as before Brexit. Just change the tax codes. And again, we went through this early on in the presentation. So processing the purchasing, this is the main workaround for processing imports. So we want you to set up, so version prior to 27.1 will not create an automatic credit for the postponed VAT accounting. To facilitate in doing this manually, we need to create a new contra account for customers, supplier, and bank, one for each. These accounts can be used for recording the postponed VAT for all UK and rest of world suppliers. These accounts will always have a zero balance after your transactions are posted and allocated, and that is your control. The 3 that we suggest here, we've just got an example. The contra customer is CONC01. The contra supplier could be CONS for supplier 01. And again, a contra bank account, just select your next free bank account. In this case, we're using 1210. And these are the accounts that will enable you to post the postponed VAT. There's a little bit of setup, but the actual transactions themselves aren't too bad. Hold on. So we have 2 steps to process. So typically we have a net and a VAT. So you're going to have a goods invoice and you're going to have the import VAT. So post a purchase invoice and a corresponding sales invoice to these new contra accounts for the value of the postponed VAT. And then post a purchase invoice to the original, to the UK supplier's account for the value of the goods. So a purchase invoice for the VAT only, a sales invoice for the VAT only to these contra accounts, and then a purchase invoice to the actual UK supplier's account for the net only. We'll go to an example in a minute. And then in step 2, you're going to post a purchase payment and a sales receipt for the VAT component of the contra bank account to the contra bank account. So we'll go through an example here now. Firstly, enter the UK supplier invoice. Remember to zero the VAT amount on this, as this goes on a separate invoice against your contra account. Enter the VAT-only purchase invoice using supplier account CONS01. That's the second line there on this batch invoice screen, and it's VAT only. So as you can see here, the balance on the supplier's account is the net only. And you can see that the VAT is shown separately in the contra supplier account. Next, we enter the sales invoice VAT only amount to the customer contra account, CONC01. All of these transactions now are using T39. So then in step 2, we post a supplier payment to the CONSO1 supplier account. And again, you can see here that we are selecting the postponed accounting contra bank account 1210. And we are allocating this payment to that VAT-only purchase invoice that we created in step 1. So paying it off. And finally, we post the customer receipt to the CONCO1 customer account. And again, you can see here that we are selecting the postponed accounting contra bank account. And we're allocating it to the VAT-only sales invoice that we created in step 1. Again, bringing that contra customer account back to 0. And you can see at the end that all accounts are back to 0. So once your transactions are complete for your VAT period, you can now generate the VAT report we mentioned earlier and the figures for your VAT and return of trading details. So layouts in earlier versions of Sage 50 will not have fields for postponed accounting. And that concludes the presentation for today. I hope this proves useful for your business, whether you're upgrading to 27.1 or not. So now I'm going to quickly have a look at some questions. Somebody just asked here, will you be sending a copy of slides from the webinar? We won't be doing that, but we will have the recording on our website. What if you have used different tax codes all along and these are not available, or indeed you have used these rates for the temporary 21%? Okay, if you're upgrading to 27.1, it will find the next 12 sequential free tax codes and use that. If you're not, you yourself go and find the next 12 free tax codes and set them up as we went through manually. Do we need to tick GB as EU country for running November-December VAT return? Yes, you should have the GB ticked as an EU country until you're finished all your returns for 2020. Can you revisit changing the country to XI if you trade with Northern Ireland? How does that affect trading domestically? Can you revisit changing the country to Northern Ireland if you trade with Northern Ireland? Revisit. How does this affect? If you trade, your customers and your suppliers in Northern Ireland must be set with a country code Northern Ireland, XI. I'm just not so sure what you're getting at there. Maybe call into support and we can go through your particular situation. The 12 new codes will automatically be there once we upgrade. Yes, that's why your regional settings must be set to Ireland if you're in the Republic of Ireland company. When using code C39, when generating purchase orders, Sage is generating VAT on these. How can this be changed? So again, you need to change your settings, configuration, and tax codes. Why is the 27.1 catering for 9% reduced temporary rate, but not the 27.1? No, the 21.21 temporary rate, Sage did allocate previously the T39 to that, but because it's a temporary rate, they're not going to continue with that. So they're future-proofing it, basically, is what's going on there. And I'm not so sure about the 9% rate, whether that's temporary or whether that's an ongoing rate. We are upgrading to new version. Do we need to change all UK suppliers to the new tax code, or is this happening automatically? No, nothing will happen automatically. That's a decision for yourselves whether you're going to be using postponed accounting or not. Okay, that's unfortunately all we've got time for right now. So anybody's got any extra questions, please feel free to call the support line. The number's on the screen there, or send an email to support@pimbrook.ie. And also refer to our website where you should be able to get a hold of this webinar. Okay, thank you for joining us, and goodbye.